Those of you who have just subscribed to our platform on Castle Solutions Club, you don't need to struggle with your trading. Get your trading view, free account. You don't need to pay for it. Now, of course, Plan B Express PnL trading strategy for beginners. So this is just to give you, we have more detail, but just to give you a little word that will not disturb yourself. Of course, you need to have an idea about the fundamentals, what's happening about the things, the trend in the market. I mean, economic news are not like, so that one is normal and is certain. You will need to know have an idea. And I always recommend and advise beginners not to trade when there is news. Okay. Especially if you are doing day trading. If you are a swing trader, you don't have problem at all. To be very conscious. Now, so let's go click on. So you're going to, before we go into the chart, so take note of this. You can screenshot this. First, check overall higher time frame at least 1 day market trend. Okay. All right. So the market trend, and then so just call order flow and mark pivot point if you like. Number two, then this is where your job now begins. Step into 1 hour to spot the current structural and trend bias. So then there's a trend and there's a current trend. Then spot the recent break of structure and plot your GAM box. I'm going to use that of Fibonacci retracement for PDRs. That's premium and discount areas. Marking your AOF, that is area of focus, inside premium or discount. So if the market is uptrend, you want to see that your own area of focus at the discount. If the market is downtrend, you want to see at the premium. I'm going to do that practical now. Then wait for market to return to the area of focus and then step down to 5 minutes, 3 minutes, 1 minute, getting power 3 or market structure shift. Then take your trade and after confirmation with your appropriate stop loss. Now let's go to the chart. So this is Euro USD, very simple, right? It's Euro USD. Overall trend of Euro USD is up. So there's a trend and there's a trend. Okay. Now you can see now generally the Euro USD is uptrend. Okay, we take it from here. So let me just clear this one. So let's clear anything that may be there. Okay. So overall, the trend is an uptrend, right? But we are getting to an exhaustion point. So I'm not going to go to those details. Forget about those things. I don't need to start teaching you things that are too complex. There's no need. Okay. So we just want to be making money. So you want to come, but you don't want to be caught unaware. Because if you look at it now, if you're going to go to a larger structure, it's still an uptrend because move here, here, here. So there's something we don't need to understand structure. So I'm going to do that here, here. Okay, this is high, low, this high, this low. And so we're going here till when we come to this point. This is a high and this is a low. So that means if you look at the market ordinarily now, so we have a high here, we have a low, and then we have a high. So that means the market current dealing range is from here to here. And now what we have had is that the high is swept. So the market's supposed to be coming down, but that's not the issue with you. All you want is that, how can I make money? Very simple, right? So now let's expand. So on daily time frame, it's obvious that we're in uptrend. And even the current daily time frame, it's obvious that we're uptrend. So if you look at it now, so that means this market. So if I look at something, you see an up here. So I don't want you to do this, but I said, if I come, I want to mark pivot point. So there are areas I want to mark. So sometime when I come in a day, the first thing I mark is to mark the previous day high and low. Okay. So I mark the previous day high and low. So these are pivot point. Okay. And these are external liquidity. Okay. So high and low. Okay. So high and low. I don't want to believe that to an extent. If the previous day. Okay. Then we have other pivot point maybe up here. Then we'll have the other one here. I don't want to go into those details. So, but you have just seen that all of these were in an uptrend. Okay. We are in an uptrend. How do you mean? So look at it structurally. You're an uptrend. Let me show you something. Take this mark here and mark this one. This is a low and high, a low, a high, a low, and a high already break a structure. So let's see if it's going to get here. I don't know. So now, so you have just seen that these are not trends. So let's quickly go, just go straight to 1 hour. So I don't want to go disturbing you so much. I want you to find a current activity. So let's go here. So finding a current activities is an uptrend, you understand? Of course. Now look at the current activities. Look at this, right? On daily time frame. So ordinary on daily time frame, you are spotting this. The market was making a trend. This is an impulsive move on daily time frame. Was having higher, high, higher, low, higher, high, higher, low on 1 hour. All right. They got here. This is a structural broke. It broke the structure here. I don't want this thing to be too complicated. So ignore as if I'm not teaching this because I don't know. So this one broke and we'll pull back. So ignore as if I'm not teaching all this. So you have just come to daily time frame and see that the market is an uptrend. Makes sense. So the one thing you now need to do is very simple. So let's work with this guy now. So let's work with this guy. So pay attention very quickly. So pay attention. So this is 1 hour. So let's work with this trend. So here is a downtrend on this 1 hour. Here is the bottom of the bottom. This is a low. Now look at the very high here. And then we have another low. Now, we don't know where this one is going to stop. So let's pick it this way. Now, but ordinarily, you may miss this. So, okay, so now here you have, so all you need to do is, we now said, now look at the 1 hour, the structural trend is an uptrend, and then you want to look at a recent break of structure, all right? A recent break of structure. So this is a recent break of structure here, and then we have a low here. So if you just break a structure and we have a low here, so what are we waiting for? There's something we're waiting for. We want to see when this market we have a pause. That is just like temporary stop. And so that's what you are looking for. So, but now it didn't have that now, right? So you want to have a pause, and then that's a temporary stop. Now, but if you want to do something, so what are we going to do now? Are we now going to take trade? You can't take any trade now. The market has left you behind, right? So other people, right? You can see why marking pivot point is very good. So now what are we going to do? So we'll look at when the market now, let's say the market, so when the market now have come to a pause, start finding to come down. So let's say you now let the market to be somewhere here. Okay. So if the market has moved up to that extent, so you want to look at when would the market pull back? Because whatever the market is doing now is already an impulsive move. So it's like a market is crashing, you want to jump into the a falling knife. So you can't do that now. So you allow the market to run because it has already broke the structure. This is a break of structure. So this is swing low. So the market, once the structure is breaking and is broken already, and then you want to find. So there's going to be a need for patience for you. So what's the patient here? The patient is very simple. Now, so your dealing range, okay, I see you use Gumbox. Ordinarily, if the market, the Gumbox is similar to Fibonacci retracement. So I already marked my own. Maybe that's why you are seeing it very simple like this. When you do yours, it's going to do something like this. Let's go. Um, so when you do yours, it's going to do something like this. Aha, good. So when you do yours, it's going to be like this. So click on it, and then you go to settings. So you're going to you remove this 38. All right. You remove this 61. You leave 1. You remove this 25. You remove this 75. You remove this background. You come back, you do the same thing. You remove this one. Okay. In fact, you remove everything that has to do with this place. Uncheck everything here. I have no business here. Uncheck everything here. Can you see what I've done now? Very simple. So if we want to remove the background, of course, there's nothing to remove because it's not active. So that's what you just do. So if you want to do, so the price is at the left, so you're good. All right, yeah. So okay, that's 0.5. And if you want to turn it to a percentage, let's go there. Where do we have that here? Okay, so at the right label, anyway, so that's long. So what you're looking for is that when the market gets up somewhere, you want the market to pull back anything below 50%. Now, so anything below 50%, so that could have maybe a fair value gap there, or that could have another block there. If not, ordinarily, when this market travels so much up here now, what you're going to look for, what you're going to have is this point where you have another block. So that means you are patiently waiting for the market to come here. But in most cases, market may not come here. So that's what you want to identify. Now, because if you look at this market, look at this breakout structure here, and look at this kind of massive move. These are fair value gap you want the market to come back to. Never did. And so what could you do? So if possible, you couldn't find a trade. So that's what you are doing. So you're waiting. So if I go back to now, when the market has actually pulled back, you are waiting for the market to return back to, that's your area of interest or area of focus, as the case may be. All right. Now, if I go to 15 minutes, it's different ball game altogether. You're going to find another kind of substructures and all of that. So, but 5 minutes where you come back to, and to be able to find a trade. All right, so so let's go to another instrument. We can find, so 1 hour there. So remember, so when the market is moving like this, you are not going to trade. You'll wait for it to start retracing, and then you mark your. So this is a current structure. Then you want to find 50%. All right, as it were. So let's look at another instrument. What other instrument can we actually take off? Let's look at here. All right, let's look at USDJPY. Okay. Now, so here is USDJPY. So ordinarily, we'll say we'll go back to daily time frame. All right. So we'll go to daily time frame. So let's go. So if we go to daily time frame, what do we have? This is an uptrend, but it's trying to change direction. So higher. So we have a high here, and then we have the low here. Then from here to here. So we have this market pull. But ordinarily, you should come back here before you can see the market is already over. But there's something that have just happened here. So the market have a high here and create a low here. Do you understand? So if the market has created a low here, to what extent this market have changed a kind of movement? So I don't want to take you to too much advanced teaching. So, but this market is poised to start coming down because we find it from here to here. We'll find that the market has retraced back to this point and break. So that means what we're having now here is this recent low. So there is no any new break of structure. So, but this can be a pivot point and this can be a pivot point. Do you understand? So let me take a dotted line. So I just hope this is not going to be too big. I don't want this training to be too boring for you or too complex. I just want a situation you can come to the market, you pick money, and you trade and go. Okay, so let's go to 1 hour straight up. So this is 1 hour straight up, okay? So this is 1 hour straight up. I love this. Okay. So this is 1 hour straight up. So remember, I say you are looking at current trend. If you go by 1 hour, are we in uptrend or downtrend? You are in a downtrend. Do you understand? You are on a downtrend. So how? Okay. So let's go. So this is a high. Oh, I don't want to pick this PV point. So let's take just a horizontal line. Oh, no, sorry, a trend line. So here is a high. Then let's go here. Here become a high. So the structure is broken. So what you actually expected was the market to pull back into where? So now the structure was broken, but just that you may not see the structure properly. So how was the structure broken? This is a high, this is a low, and this is a high. Now this broke the structure. So it's called market structure shift. But forget about those big English. So ordinarily when this market was turning, you can actually, but this is not correct. You need to let the structure get broken, because if you do this, the market can change direction. Because if I'm taking my Fibonacci retracement, for instance, from here, yeah, and then say here, now the market actually traveled back here. This is a rejection, and you will have sold. All right, this is on 1 hour. Now, so the next thing you want to have is that you want to see a structure break. Now, when the structure breaks, so this is another kind of point. So look at it here. This candle here, because we have a bounce back. So let's take our Fibonacci retracement. That all the thing you're just doing is just to find your premium and discount. Now, if we take our premium and discounts on 1 hour, can you see now? So there's a premium. So this is called PDRA. So premium and discount. Now, this is your other block. You see this one. So most of the time, people don't pay attention to it. So there are confluences you are checking here. Here you have, this is, can you see now? Then we have another point here, what is called fair value gap. So an imbalance. So there's an imbalance here. So an imbalance here. So let's change it to color, something purple or something red, something like that. So here you have 2 points here. So can you see something? Now this is a breakup structure. So you're waiting for the market to pull back there. So from here to here, then we'll go back to 5 minutes. So you want to go back to 5 minutes, very simple. Okay. So now if we go back to 5 minutes, you can see the way the market actually traveled back to that point on 5 minutes. But there's something that you must observe. What we observe is that there are liquidity available here. So you can see liquidity. And then the market has come back to this origin. So coming back to this point, right? Can you see? Coming back to this point was a very sharp one. Now listen, some persons do this. They take a pre-order, right, into the, because you just tap into the other block. Sometimes you may not get there. It will just feel the what's it called? The fair value gap. So if you come back to 5 minutes, ordinarily, this was too sharp. So this is a massive, this is a total sweep of liquidity. Now, but this is the little challenge I have here. On 5 minutes, I always want to have a power of 3. So, but this didn't from this field. So you probably want to go to 3 minutes. So you can see as a 5 minutes, 3 minutes. So can I find something like that there? So it's only multiple week, because see, sometimes some trade will be too massive that you will not see a kind of swift market structure. That's one thing I want you to know. So because if you are waiting for that, you may not see it, and the market just leave you behind. So you must adapt to any change that want to occur. Let's go back. So 1 minute, let's go to 1 minute. Okay, so I think 1 minute did that to an extent. What did the 1 minute do? To actually break down here. But another thing is that even the 1 minute did not return back there. So if you are waiting for market structure shift, that may be very hard. So that means this is just a breakaway. You tap into the market, broke here. So you want this market now, this is like a low. So you want the market to shift and return back. Man, it did not. But this is the thing. What really happened was that the market actually swept liquidity up there and tapping. Now that means the people that will be in favor of this market will have been people who always set their trade like this. So fair value gap, some set it at the 50% of the fair value gap. Of course, this type of trade, the stop loss is going to be above the other block. Let's see how many, 26 pips. And that's not too big to an extent. That's not too big. So that means if you come back to 5 minutes, that's not too big to an extent. If we must agree with ourselves. All right. So that's not too big. So 1:2 risk reward. Then you target 1:2 risk reward. Sometimes you target the low, but some market may not really give you that. So 1:2 risk reward is already done here. Now, so if you now have time, you are trailing the market as it were. Do you understand? So that's all you do on a regular basis, and then you take your trade. So let's take off this one. So now the same thing. So let's go back to 1 hour again and see how the market is forming. Now, so we have, this is another breakup structure. Look at it here. So because this was what happened? Yes, good. So this was what brought the structure. So the markets break structure here now. I think everything together here before the total return. So let's take from here. So take our Fibonacci retracement. Where we're going to have this. Okay, so let's take off this. So let's take Fibonacci retracement from this high to this low. That's your dealing range. Okay, so now what you want is very simple. It's not a fair value gap. So what you want is that the market, remember, broke the structure. So you want to have, there's a point here called another block. That's an origin. So you expect the market to come back there, but there's something you need to know. Now, any area here is your entry, anything above 50, because already is already a premium. So it's a premium area. So the premium area is your market. All right. So the premium area is your entry. Now, some are going to enter, some are going to look for to an extent. Sometimes we want it to be over into. Yeah, so it's still okay here. So if we go back to 5 minutes, let's quickly go back to 5 minutes. Let's go back to 5 minutes. You probably have find your trade. Do you see that? So 5 minutes will find a trade already. So this is power of three. Let me show you. I will tell people power of three is not as important as where the thing actually come up from. So this is power of three. What do you mean? Accumulation, manipulation, and distribution. Now there are some conservative trader who take trade here. Now, what they do is that they come back on the third candle closes below. So I don't do that. I enter at the candle that create the manipulation. So that means your trade is going to be here. If you don't understand, you watch the video again and again. So if you want to be conservative enough, these are another block, so probably you can take it up. But if not, it's just at the high of that candle that created this. Or sometimes you see any, so look at it, this is a liquidity, get it swept, and then that was massive one. So first target is 1:2 risk reward, which is done here. Then you have any other portion that is still available, continue to ride the market. If not, you want to see that the market should deliver into this liquidity. Because if you look at it here, what happened here is that this is a buy side liquidity swept, and then this is sell side liquidity. So what happened is that when a liquidity is swept in one side, it delivers to the other side. And so that means this market should be delivering to this point. So you can take your, maybe when you have had 2 or 3 positions in, you can find another one to this point. So that's going to give you 1:4 point something risk reward. And that's going to be how much? About losing just 12 pips to make about 59 pips. Yes, so the market will try your patience, because if you look at it on 5 minutes now, this is a lower time frame. So here you have this break of structure. Okay, this is a high. Do we have any break of structure here? Yeah, I think we have a recent one here. So that means now that we break the structure, we're expecting the market to pull back, but that's not your deal. So this market is not your market. The best bet is that you allow the market to wrap down, maybe sweep this liquidity I want to return, or continue to break a structure and you want to follow it as it were. Do you understand? So this is a very simple way of trading, and then it's not going to give you any trouble at all. Now, are there chances that you lose trade? Yeah, definitely. You are going to make some calculation, and market may not actually respect it, and then you lose trade. So it's normal. It's part of it. So look at this. You can see that this guy is slowing down now. So you have to wait. And so, but most time people just want to find a trade at all time. No, 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 no. You have to learn to discipline yourself, right? When the trade is not available for you, you leave it. Okay. When the trade is not available for you, you just allow it to be. Okay. So look at something like this. This is a high. This is a low. We have a high. Then this is a break of structure or market structure shift. This market shifted here. So you want a return. So sometimes if you want to now take your Fibonacci retracement to actually take from this high to this swing low. Now it actually didn't get to the premium area properly because we have what we call fair value gap here. So look at it, it actually mitigated the fair value gap fully. So, but of course you have seen from 50%. Okay, so this is a fair value gap, very tiny. Then the market get there. So by the time you come back to your 5 minute, 3 minutes, you will have find the essence the need to have enter a trade here. So if you look at this market now, what happened? It broke this structure. So this is another break of structure down here. So let's take it here. This is another break of structure. So this is a break of structure. So that means from this high to this low. So this market still have maybe a long way to go to deliver its expectation. Look at it here. So professionally speaking, no professional will take this trade right now. All of these things, this is creating of liquidity and all of that. So what you want is the market to actually come over. Now, if it didn't give you no bother, no bother. So because this is fair value gap, look at it, a massive one. So that means you want the market to actually rally up, not only to 50%, but if you come to 50% and start rejecting, why not? But if you look at it now, so let's say this is the fair value gap from here. From here, because it combines so many to this point. So let's take it off this way, right? It has tapped into it before. Now, if I take my gun box, for instance, because if you look at our own 50, 61, and even up to 70, so everything just fall into that range. So if we take gun box, and then what do I do? If I take my gun box to check 50%, and the market is going to come to that point. So that means it's actually aligned with that for 50% or 61% Fibonacci retracement. So this type of a trade, can I take it? No, you can take it. You have to wait to see the market return back to this point, and then at the rejection and give you some signals of entry, and that's where you're going to be selling. Does that make sense? It's very, very simple if you can pay attention to simple instruction in trading. Trading is lovely, but our impatient is very terrible. We don't pay attention. We're not ready to settle down. So we're just looking for, let it give me now. I want to make money and all of that. You will make money if you can enhance your knowledge. And it's very important. All right. So I'm just trying to do this as simple as possible so that you can see how to find a trade. And then quite unfortunate, we can't even find one now. So let me just click any. I don't trade too many instruments, so that's why. So if you look at it now, this was a temporal up high, right? So, but if you look at it, maybe overall it's an uptrend. But if you look at it within this jurisdiction, this is a downtrend. Okay. So what happened? The market has come down here, created a low here. They failed the rally here, and then you can see the breakaway. Another break of structure here. Okay, this one managed to come back. We have this. Okay, we have another break of structure here. This one to come back to the fair value gap, and that's what is still selling. So if you look at it now, so far this market has done this, you are looking for this liquidity area. This is one of the worst instruments I've ever seen. I've been there for since on Monday and they're doing nothing. These coins who have been struggling. Okay. So if we look at Bitcoin, on 1 hour time frame, we have a high here, we have a low, and we have a high. This was swept, so that means we have a high, we have a low. So breaking of this low now, so you expect the market to come back to this point. So if you take from this high, so you're expecting the market to return back somewhere here and probably get rejected, then you want to be selling. Yeah, so quite unfortunate. So that's what you have. It's the same principle into synthetic trading. So it's the same principle. If I go to synthetic market right now, so if I go to derivative synthetic, in fact, I saw a market on derivative synthetic and it has been ranging. And so people wouldn't know how and why the market continued to range there. I think it was P10. I go on 1 hour time frame. So first of all, we say we go to a higher time frame. So let me take popular instrument 75. Where is it now? 75. So we go on the daily time frame just to have an idea. So you can see overall trend of this market is still downtrend. Why? It's a downtrend in the sense that if you look at it, this is the recent high and then a break of structure. Look at it here. So that means ordinarily you're looking, can we continue selling? If you say yeah, you're saying, okay, let's take it this way. From high to the low, you can see that the market exactly starts rejecting from here. So that means a sell. Do you see? Now, so if that's the case, so if I go down, so this daily time frame, because sometimes synthetic is good to go on a more higher time frame. So this is daily, right? So if you go on this daily from here to this 75 was actually your entry. So now if you go to 4 hours, just to go very fast because you already know that it's a downtrend. If you go to 4 hours, you can see how the market have been dialing in 4 hours, but of course, a total rejection for it. Now, so if I'm going to go to 1 hour, sometime, so we'll go to 1 hour, which is like working with this current trend. So 1 hour seems to be sideways, right? Look at it logically. So you have a high here, you have a low here, you have a high here, and then this is lower. Make sense? So that means ordinarily, since this was lower, so this was your 1 hour. So forget it. This is internal, these are internal structure. So if you look at it now, so that means it will have been here, this high to this low. Which one is the lowest? Okay, let's sweep it this way. Do you understand? So now if you go back here now on your 1 hour time frame, you find out that, so this is what happened. So now, what is here? All these, their liquidity. And now if you look at it on the from the 50 fib level, let's take off this 38 so that you won't disturb yourself. So from this 50, 61, and 72 or 75, that's your main area. And now if you look at it here, what really happened here? 5 minute or 1 hour time frame. So you have a fair value gap here. So the market actually ran into it and we don't safe because it's not a strong tower. All right. So the market has come down here. So you are not bothered because you know where the market is going to. So then you go back to 5 minutes. Right. So let's go to 5 minutes straight away. Probably you may even see a very fast market structure shift here because, yeah. So look at it. It created a double top for you on 5 minutes. So that's a kind of chart pattern. But forget about chart pattern. I don't trade chart pattern. So I trade structure. So here you come. This is so that's like, so all of this liquidity have been swept, right? All of this, all of this, all of these are liquidity now being swept. So here will happen. So you have, even if you are trading this again, it's the same way. So that is a counter trending, right? So here we come. It's a high, it's a low, and this is a high, and this is a low. I think this can higher than this. That's a total sweep of liquidity. So after sweeping the liquidity, so what we want is kind of breakup structure. Now, the structure was broken here, but of course, this is a breakaway because this was a structure break or something. Yeah, so let's get here. So you're looking at, so this is, all right, yeah, fine. This is a breakout structure. This just is sweep. So this is a real breakout structure. So not this one, this one. So here you have this market and broke the structure. So you're waiting for the market to return back to the origin. But there are a few things you will find here when the structure was broken. This was like a counter activities. If not, the market ought to have come here. So, but getting here, this is a total rejection, and maybe that's the place your trade will have been in. Now, when the trade is in, 1:2 risk was your first target. All of this are liquidity area you probably will be targeting. So before this massive move up. Now, at this point, you are not moved by all this move up as such because the market is bearish. Okay? The market is bearish. So you can see how the market was dialing and all of that until we have this massive move. Sometimes when people react to all of this, that's inducement. So induce them and then they say, okay, the market is buying back. Okay, what factor are you checking to buy back? And then the market has actually done what they want to do. and then take out all the money from people's hand and then see go its way. So if you look at it on 15 minutes, it was so clear. So this is how you trade. Very simple. Now, I'm not going to give you complex thing to trade. It's just for you to identify simple movement of the market. First of all, so see overall market movement of overview. And then, okay, look at the go down to a medium time because 1 hour is like a medium time. Okay. And so if that's the case, so you can see that the market is selling down, right? So if it's selling down, where are you going to? This is a draw of liquidity. That's massive. So, but you ask me, Feli, can I enter now? Well, I can't enter anything here now because we have this. This is like a structure. So this is a broker structure. So you want this one to be broken. That may take another few days for you to have this. But certainly, you are looking at this is a draw on liquidity. This is the lowest. So this is the lowest. So if you go on 1 hour even, you will have traded it anyway if you know what you were doing because you will have already marked all the important areas and all of that. So this is like, let's go this way. So this is a low and this is a high, this is a low. So this is the high. Okay. So, but for me, there's a way I think I actually have done this. And so all of those things. So people have traded and make money back up down here and then before the market actually show itself. Okay, make a lot of sense. All right, so that's what it is for. So we can check other instruments and all of that. So, let's say you check 50. All right, let's check 50. Now, sometimes when I look at some of the structure of an instrument I want to trade that is not too fantastic, I just abandon it. This is fantastic, right? Now, if you go to on the overall of the trend, look at it. Overall of the trend is okay, so it's an uptrend, right? So it's trying to go up, but it's a bit slow or something. Yeah, but it's an uptrend. It's a bit slow. So we can have a high, a low here, a high, a low, and now this is a recent high. So if that is the case, if you look at it, this is daily time frame anyway. But this is a low, this is a high, this is a low. So if I take my Fibonacci retracement, I'm not saying you should do on daily, go on your 1 hour. We already have an idea that this market is an uptrend. Look at it now. Came back to this point, so let's start doing what you want to do. Now, if you go to 4 hours, okay. So, but you know what I told you is your own target is all right. 1 hour time frame, right? So the markets have come down here and all of that. So, but yet, so let's go to 1 hour where you probably want to mine recent happenings and take your money. So you have no business with anybody. So here, if that is the case, so the market is recently an uptrend. So how do you mean? Okay. So here, come on, this massive, this is a breakup structure, and this is a low, and then this is a high, and then create another low. So instead of this one to be taken, create another low, and then this is a lower high. So this is high but lower than this. This is a breakup structure. And look at the massive thing in it. It just abandon and run away from there. And that's why we always recommend higher time frame for this type of stuff. So let's see, this is a breakup structure. There's a high. This is a breakup structure. Can you see now? Can you see return? So breakup structure. So all of these things are just a break. Yeah, but it did something funny here. So by the time you go to lower time frame, but that's not your business. So your business is that you're looking at this here. This is a high. And now this is a breakout structure. So this structure, you need this one to be taken out. This was taken out, massive. Okay, so let's take from down to low to find something. What are you looking for? Taking it to this point, where you can see the market return back to the 50% adjustment level. Okay, and now that 50% adjustment level, remember, that was a breakout structure that you expect the market to go back to and mitigate the other block, perhaps. And so that is like a kind of mitigation block. So the market come back there and then tap into this. So you could write, I'm not going to, let me not go detail that. So that's what you have. So now on your 1 hour, so that means you'll have found an entry here. So by the time you go to lower time frame, that will have given you a very, very nice one to enter. So look at it, what we'll say here. We'll take it from this low to this high. So let's go to 5 minute time frame first. All right, so going to 5 minute time frame, do you see that? Perfect. That was nice. Forget all of this noise. You may not know what to do, but of course, if I was here, I know what to do. So, but don't worry yourself, because I will know how to do. I will have come down to a lower time frame, and then I will have find some good entry. Yeah, because this is this. I was saying this is a high, this is a low, and then this is a low, then this is now break of structure. So it's a break of structure. So this is a continuation of it, and returning back here. So that means if you're going to find this one, that's a very nice, interesting. So most people will have fine here, but I don't like drawing this without breaking a structure. So I love a structural break. So, but this person will have fine a trade here. So, but let's face what matter to you. Yeah, let's face what matter to you here. So that means the market have returned back here, and that have formed your entry very proper. So this is power 3, and then this region, and then you will have found an entry. So finding an entry here will have been this long. Then this is the close and your stop loss. Sometimes to be more protective, depending on how big the volume of this 50. I think this guy is not big, he's very slow. So can go below this point. So what's your stop loss level? So that's about, is it 7 point something? I don't know, something like that. So if you're saying take profits, so you could target this high. So targeting this high, that will be how much? That'll be 1 ratio stuff. Is this 3 or something? I can't really know. This is a very slow stuff. So this is it. All right. So by the time you return to 1 hour, you will find where the market was entering to more early. Okay. So the market is still doing what it's doing. So it's temporarily bullish. So that's why you take your 1 hour time frame very seriously, and then you can always find trade. Now I'm going to well trade, the same thing. I'm waiting for this market here. I hope it's not even just slowing down for nothing. So I'm not seeing where to save it. Gains. Yeah, I'm actually waiting for this one here. Okay, so enough of this. So go through this training over and again. Then you're going to be very, very fine because you will learn things in an easy manner, an easy strategy that will help you. If we return back to that Euro USD now, let's see what's going to be happening there. Let's share and go back to that point so that you can just revalidate what we've just taught here. Okay, makes sense now. Can you see now? So now this is your 1 hour. Can you see this candle now? I told you have to wait this market. So you use a gun box or whatever. So what you want to do, so if I use gun box, can I even change the color? I can still change the color to just see. So can you see now? The recent low and then recent high. So you're expecting the market to return back here. So if I want to do, I want to put the color. Can I put the background? Makes sense. Okay. I want to change this one to red. So you see now? So that means I'm expecting the market to return back below this. Now, at their point of your I said here, nobody knows. So for anything below here is what you want to find an entry. But perhaps I can still plot this my order block. But will it come there? Nobody knows. Okay. Because you expect the market to have come down here. It did not. So let's take this guy off. Ooh, We didn't do the 50%. So that means I'm looking at so anything below that point. Okay. So my buying region is in this place. Except and if when it come back here and decide to break this low, then it's invalidated. So you have to understand all of those things. All right. So this is it. And that's what it is, ladies and gentlemen. So pay attention and learn basic thing to enter your trade. So bye for now. You have a nice